silver has kind of late in the last few weeks was leading gold. I think ever since we broke like 35, 36, that confirmed the breakout. Yeah, so I'm very bullish silver, even more than gold. That doesn't mean I'm going to sell my gold to buy silver, but just keep trying to buy both.
I expect conservatively at least 10% more by the end of the year, which would put us at 44, and perhaps 20% more, which would put us at 48. Time will tell. Maybe this is going to sell off really quickly and we only get, couple days above.
Gold and silver are moving beyond simple market trends, reflecting deep fractures in the global financial order and accelerating shifts in geopolitical power. Mario Innecco's analysis reveals that gold's sharp upward trajectory early this year, climbing to approximately $3,500 by April, has now entered a 4-month consolidation period that, from a technical standpoint, typically resolves with further upward momentum rather than a breakdown. The geopolitical dimension of this shift became particularly evident at the recent Shanghai Cooperation Organization summit, where the strengthening alliance between India, China, and Russia was on full display. China's military demonstrations and its explicit call for a new BRICS-dominated order highlight the accelerating pace of de-dollarization. Member nations are steadily reducing reliance on U.S. Treasuries while accumulating significant gold reserves as politically neutral assets, alongside efforts to expand the yuan's international role. For the first time since the 1950s, foreign central banks now hold more gold than U.S. Treasury securities, a historic reversal that underscores weakening confidence in the dollar. The technical backdrop adds further weight to this narrative. Projections based on earlier momentum in gold suggest potential targets near $4,300, with the possibility of even higher levels in the months ahead. Institutions such as Goldman Sachs have floated scenarios in which gold could reach $5,000 if confidence in the Federal Reserve continues to erode. Compounding this is the current official gold valuation of just $42.22. If revalued closer to the spot price of $3,500, it could spark a rally reminiscent of the early 1970s. When successive revaluations from $35 to $38 and beyond ignited a surge that carried gold to about $200 by 1974. A similar adjustment today could unleash equally explosive price action. Before we dive deeper into the discussion on gold, silver, and the unfolding changes in the global monetary system, don't forget to like this video, subscribe to the channel, and hit the bell icon to stay updated with every new insight.
The first one, technical analysis-wise, we had a big move in gold at the beginning of the year. We topped at 3,500 in April, and I guess the market took a breather for over 4 months. And usually these consolidations, they end up, especially a bullish one, end up breaking back out towards the upside. The chance of it breaking down is like 1 in 4. So technically, it's just confirming the formation. Fundamentally, I guess it's related to all the turbulence in the world geopolitically, I would say, and the fact that BRICS are getting more and more united, especially after India kind of made up for now with China. That will accelerate de-dollarization, and also all the debt in the West, government debts, that's weighing on the bond market, and I think that's helping gold. And I also think the economies, not just in Europe and in the US, are slowing down. And the economy that slows down, that means less tax receipts, and that means more fiscal problems. So I think it's a combination of those things. Silver has kind of late in the last few weeks was leading gold. I think ever since we broke like 35, 36, that confirmed the breakout. Yeah, so I'm very bullish silver, even more than gold. That doesn't mean I'm going to sell my gold to buy silver, but just keep trying to buy both. Yeah, I agree 100% with you because long-term bonds are just fiat currency due in 20, 30, or 50 years. So the higher the yields go, that means investors are selling those bonds. They don't have as much confidence, and if they're going to buy them, they want a higher return. And Germany as well. They are at 15-year highs. I think the 30-year there. I mean, the last couple of days, we've seen a little bit of a rebound in these bond markets, so yields have gone back down slightly. I think there's been intervention almost every day in Japan by the central bank. The Bank of England intervened as well. So they're going to try their hardest to keep this from getting worse. But I don't think it's going to work. I think the markets are bigger than the central banks. And I don't think we are out of the woods. And September, October are usually seasonally not very good months for currencies and bonds. So yeah, I would keep an eye on that. And I think, like you said, Japan is like it is a big part of this, because their yields have gone from being negative to like the 30 years around 3.3%. Doesn't sound like much, but when you're coming from zero, that's a lot. Oh, definitely. And I think the summit you had in, I think it was Tianjin in China for the Shanghai Cooperation Organization was like a big turning point, because India attended and Modi attended for the first time in 7 years. And it looks like India, China, and Russia, the big countries in BRICS, are very united. And then you had this military parade commemorating the end of World War II in China. And Xi Jinping was really flexing his muscles there. So yeah, and talking about a new order, Chinese order or BRICS order. So yeah, that really, in my opinion, accelerate de-dollarization even more, because these countries, even though they're not going to get rid of all their treasuries right away, they're going to try to accumulate more and more gold, because gold is the only neutral reserve asset, even though I think the yuan will be a very important currency for these countries. So that's what's going on, and it will be interesting to see how the U.S. Reacts to this, because it's a challenge to U.S. power, and hopefully it won't result in any conflict. Actually, it's difficult to give levels, but I have a feeling that gold and silver are going to surprise on the upside, because this breakout is quite significant. And yeah, so I mean, looking at the technical picture, if you measure like the move from the beginning of the year to April in gold, and you extrapolate it from the breakout, it gives you 4,300. But it could be even more in the next 4 to 5 months, I would say. I think Goldman Sachs has come out and they said they could see 5,000 if the market loses confidence in the Fed. So anything's possible. But I wouldn't want to be short gold and silver. Anyway, I don't recommend people go short gold and silver. I think there's a good chance because even the Treasury, well, actually the Fed, their accounting manual earlier in May, they wrote about that. And in the beginning of August, there's an essay written by an economist for the board of the Federal Reserve talking exactly about that. So they are thinking about it. What it will do to the price is put a floor at the level that they choose to revalue it to. Right now, it's at $42.22. Even if they were just to revalue it to $3,500, which is where we are right now in the spot price, that will put a rocket up even more, rocket up the gold price even more, because in 1972, they revalued from 35 to 38, and then the market just kept going up. And then they revalued again in 73 to the level that we have now. and gold took off and went to like 200 by the end of, I think, 1974.
David Morgan's analysis of silver highlights how the metal, long overshadowed by heavy short positions and algorithmic trading in the futures market, is now aligning with broader global shifts that favor precious metals. Russia's accumulation of silver reserves and China's approval for insurance companies to diversify into gold both underscore a trend of institutional recognition that tangible assets are essential in a world where confidence in fiat currencies continues to erode. In this context, silver's critical thresholds at $30, $40, and $50 are more than technical markers. They represent potential turning points where psychology, history, and shifting reserve strategies converge. The breakout dynamics Morgan describes echo the same forces underpinning gold's advance, where a sustained move above $2,000 and stability around $3,500 has validated a structural shift in the precious metals complex. If silver can confirm its uptrend with strong closes above $40, the lack of historical resistance means it could move rapidly toward $44 or even $48, propelled by both investor momentum and institutional accumulation. Just as past revaluations of gold revealed suppressed value, silver now stands at the threshold of a similar reawakening, suggesting its true role in the evolving monetary landscape may be far greater than current prices reflect. Let's get back to the interview.
And there's been a rather large short position in the silver market, as there usually is, but we all know that the market is set as a derivative. The price in the futures market, which dictates the spot price and what coin dealers sell their metal for, and et cetera, is determined primarily by algorithms. And so at certain levels, certain things happen. And I have to defer to Michael Oliver, and Michael does momentum, and momentum is very important. Being an engineer, momentum is defined as mass times velocity. So like the whole idea of changing trend with a ship in the ocean, if you have a huge ocean liner, that's a lot of mass. So it's hard to change the direction of it. And the way you do that is slowly. That's how these major trends can change at times. The point being is that the momentum is in our favor. The algorithms are saying buy, and the institutions are buying it mostly for industrial purposes. Yet we do see entities such as Russia that's allocating silver. And you're also seeing on the gold side where China says that their insurance industry can allocate up to 1% in gold. So there's a lot more momentum in a lot of ways in both these markets. And silver, being a smaller market, gets a larger move than gold once the momentum starts. A lot of people think that the news, dictates markets. But if you look at Socioeconomics, a book that Robert Prechter wrote, who's an Elliott Wave guy, and some others, studies have been done independently, several. And really, people have the idea that news drives markets. At times it does, but it's really like 25% of the time. So if you look for a news item, like, a breakdown in negotiations or whatever, and that's what drove the market. Again, it's buying pressure. Why? We really don't know. My guess would be the idea that the markets were closed in the United States so that the aftermarket or the smaller markets in China, in Asia primarily, a little bit of buying pressure goes a long ways because there's no countervailing forces going on at the same time. Even though markets open in different time zones, the New Yorkers or people in Chicago or wherever can trade in the Globex, so they can be any market at any time if they choose to do so. So I think that really was probably part of it. That's how I would think about it, but am I right or wrong? I think really in the long term doesn't mean a lot. What it does mean is that it doesn't take much buying pressure to move this market. I think it was up over $1 yesterday on September 1st. And the last thing I have to say with tongue in cheek, but this adage goes on for miles, and I put it in almost every report in my April issue, that there's an adage that says sell in May and come back after Labor Day. And believe it or not, that adage holds true very often. And in the April edition of the Morgan Report, I said gold is topped at 3,500 and will remain so throughout the summer and maybe even longer. And so here we are, Labor Day, and it just shoots up. So I'm going to do an update for my premiums members today, later after we're done, talking about, here it is, we have proof. It's backing off in the U.S. markets right now somewhat, but it's holding a lot of the gains that it experienced yesterday. Round numbers in commodities in general are very important. There's a psychology that goes with it. And so whether we're talking soybean oil, wheat, silver, or whatever, those big numbers are meaningful psychologically. Oh, we got $30 silver, now 40, and eventually 50, and maybe 60, 70, who knows? But it's a big deal. And all we need to see really is 3 or 4 closes on close of $40 or better in a row on this kind of volume, and we have a pretty good assurance that the trend is going to continue and that we're going higher. There's not much resistance. There's only, I think I read somebody yesterday, one of my colleagues in the precious metal space talked about, I think it was only about 2.5, 3 months where we've been above 40 on a consistent basis. So we don't have much resistance at all. Very few people that bought at that level are really holding now. I'm sure there's some out there, but from a technical perspective and a psychological perspective going hand in hand, you're seeing, I think, a jump probably to, I expect conservatively at least 10% more by the end of the year, which would put us at 44, and perhaps 20% more, which would put us at 48. Time will tell, maybe this is going to sell off really quickly and we only get, couple days above 40. I doubt it. I think the momentum is in our favor. It's after, I'm laughing, it's after Labor Day. Historically, we see strength into the final quarter of the year. We're not there yet, but we're getting there. We're in the beginning of that leg. We're seeing more and more participants jump in, but we still have a fair ways to go, meaning that retail that's given up on silver, maybe not silver stocks, but very few retail investors that bought even in the 30s are buying in at 40. It's like, I've broken even or I'm slightly ahead. Let's see how far it goes. But institutions need it, or industrial users need it. And so that's fueling the market. I think the Asian markets are more involved than they were in the past, although silver is not nearly as bought on a retail level in the Asian markets as gold is. Regardless, we're seeing that momentum change. And I do think that we're going to see, as it says, probably the most dynamic move in price appreciation in this last leg up. And again, where does it go? I'll say probably a couple more years. And just to be sincere, I have said, we got a couple years left, more than once, and probably as long as 5 years ago, and I was wrong. But, whenever you stick your neck out, it can be chopped off. But the facts are backing me up now. There was a false start, I believe, in 2016. I can, talk about that. I don't want to, but there were times when it looked like we were going to break into the next leg up, and it really didn't carry through. This time, it's obvious. Gold is well above the 2000 breakout level. It's $1,300, $1,400, $1,500 above that. Almost not quite a double, but from 2,000 to 3,500 is quite a move. And it sustained it, and we're breaking out of that consolidation. Remains to be determined if it's a breakout or fake out. We have a couple more days to watch. But no, it's exciting times.
The insights reveal a precious metals landscape shaped by powerful technical momentum, shifting global monetary dynamics, and mounting pressure on traditional financial systems. Gold's breakout beyond long-held resistance levels and silver's sensitivity to institutional and industrial demand suggest that both metals are entering a phase of accelerated strength, with round-number psychology and seasonal trends reinforcing the move. Central bank interventions, de-dollarization efforts, and discussions of potential gold revaluation further strengthen the case for higher prices, while the risks of inflation, debt overhang, and weakening confidence in fiat currencies continue to drive interest in hard assets. Whether the coming years bring steady appreciation or sharp surges, the direction appears clear. Gold and silver are regaining their central role as anchors of value in an increasingly unstable financial order. Could the combined forces of technical momentum, geopolitical shifts, and central bank actions trigger a major long-term revaluation of gold and silver? Stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you never miss the weekly updates. And if you follow Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for your support, and we hope you enjoy the video.